Oladipupo. Okay, don't let me pronounce the surname. You have the mic, so I don't enjoy my mouth.
Okay, thank you very much, sir. Good afternoon,
Yes.
sir.
Good afternoon.
Okay, thank you very much. Please, sir, okay, I've learned so much from today's session. Just that maybe because of the use of softwares and other things, this element you mentioned today is as if I'm hearing it for the very first time, really. But is it the same thing as chart of accounts? Is it the is it the same thing as the chart of accounts? That
Okay.
is my first
First
question.
question.
Then my second question is that you said that you are trying to mention, you said something, you said because of the way subledgers, actually the categories of account, that was what gave birth to the general ledger. You are trying to refer to the general ledger as the basis for, it was not a practice, but it was a result of some of these um, 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 ledgers such as revenue and other things that we have to create general ledgers. Can you please expatiate more on that? And when are we having tax training, please? Thank you.
All right. So the first question, you said is element same as chart of account? The answer is no. Element is a building block in the chart of account. When we started today's sessions, guys, remember I said something that every transaction that happens or events or conditions have impact on the company, on the business. The broad name given to that impact or effect, substantive effect, is element of financial statement. So we showed Dangote's financial statement, we saw the elements there. So first, when a transaction happens, when an event happens, it will affect the element. That's the first thing. So when it affects the element, the next question will now be how to give it a specific name. And that's where general ledger comes up. And that's where even the whole concept of chart of accounts arise from. To say for this particular company, based on our knowledge, as far as assets are concerned, these are all the possible types of assets that they can have. Then you can now come with specific names: trade receivable, prepayment, prepaid insurance, prepaid rent, prepaid that. You are now naming the elements specifically. It was just like when God created Adam. For those of us who believe in, who don't believe in the Big Bang theory, that man came from Big Bang. Some of us believe that God created Adam and Eve, right? For those of us who believe that God created Adam and Eve, or the equivalent in Islam, at the end of the creation, God asked him, "Oh yeah, name these things." He started naming them cat. All of them are animals, and each animal has their own class. Some are based on biology. There's the way they class it, phylum and all those things. I can't remember. Been a while now. I'm now an accountant. So they ask Adam, start naming them: cat, dog, sheep, this, that. The same thing with chart of accounts. Everything starts with the elements, which are assets, liabilities, equity, income, and expenses. However, in each bucket, there are different types of assets, specific. There are different types of liabilities, specific. There are different types of equity, income. Two broad types of income: revenue and other income. But under that revenue, there's revenue from AGO for this company. There's revenue from DPK. There's revenue from PMS. Different types of revenue. So by the time we start giving them specific name within each bucket, then we are talking about general ledger accounts. So elements are the building block of chart of accounts. Is not necessarily the same as chart of accounts. Elements have been existing before chart of accounts. So I hope that clarifies it. It's the building block. It's the bucket for each type of transaction or event that may happen before you now go on naming specific general ledger accounts. On the question you asked concerning subledger, take this for example. The guy you sold AGO to, 9 million. The specific name you gave that GL account was trade receivable, saying that this guy, you are expecting to receive that money from him. So you called it a receivable. But you want to be more specific again. You want to have a situation where you know each customer that is owing you. And that's where the idea of a sub-ledger comes in. A sub-ledger will now break down a general ledger into specific persons or specific vendors or specific characteristics as appropriate. So we can have customer A, customer B, customer C, customer D. All these are sub-ledgers. But when you add them up, add this one up, when you add all of this up, all the total is now called trade receivable. So this one is GL level, and each of these are sub-ledger. Like that, like that, like that, like that, like that, like that. Baga. That's I believe that should explain your question, Mr. Oladipupo.
Yes, sir. Thank you very much.
All right.
I also mentioned that when are we going to have a comprehensive tax training?
It's starting next week.
Thank you.
Yeah, it's starting next week.
Okay.
Yeah.
Okay. Thank you, sir.
We still have some hands up. We have IME.
Okay, good afternoon, sir.
Good afternoon, boss.
Thank you very much for the training. I really appreciate how you explain everything.
Yep.
So my question is based on an answer you gave to someone here.
Okay.
Concerning in terms of payments when the customer is going to pay us, and okay, the customer is going to withholding tax from when he's going to pay.
Yep.
So if, for example, I am in the downstream industry, and then in my cost of ordinary business, it's being stated that since I'm in downstream, so I'm into oil and gas, why charge me withholding tax when in my ordinary cost of business is what I'm doing?
Yeah, so that's a tax conversation, right? I won't like to go into that. Withholding tax it has its own principles, right? When to charge withholding tax is based on the tax law. When not to charge, when to deduct rather, is based on the tax law. So I will just leave that for tax and will not allow us go into that and just focus more on the subject matter. So maybe when we're having more tax conversations or tax trainings, or we can even engage outside of this session, so we don't mix it up.
Okay, no problem.
Yep.
Thank you.
Yep. Let's see from the chat box. Please, is WHT only charged on companies that offer services? Like I mentioned earlier, first, me personally, I'm always uncomfortable when I see people say WHT charged. WHT is not charged. WHT is another form of tax. It's not another form of tax, rather. It's an advance payment of tax. You deduct WHT at the point of paying your vendor, at the point of making payment. And whether to deduct WHT or not is mostly a tax principle thing and not much of an accounting thing. So I won't like to go into that part so we don't mix up why we are here with tax issues. Oluwatobiloba said, when you say reverse the accruals, are you saying debit revenue and credit accrued income first when the invoice arrives before posting the normal entry? Yes, Mr. Oluwatobiloba. I will be happy to unmute you if you can speak. Can you speak where you are? Oluwatobiloba. I'm looking for him here. Oops, it looks like he's out. He's not here. Okay. We have 3 more minutes before break ends. Let me see the chat box. Let me see. Do we have any questions? Remember what I said, any question that has to do with recapping, because of our time, I may not be able to recap. Because of our time and because the session is recorded, you can watch it over again, just so we manage our time well. Clement, I have given you the mic. The mic is now with you.
Hello, can you hear me?
Loud and clear.
All right, good afternoon.
Yep.
It's quite an interesting session to be honest.
Yep.
My question, quick question, you know, the typical example you gave was for an entity that has at least to a reasonable level a defined structure of having vendors and suppliers. So to register that in the accounts, it was quite easy. Now, can you please touch on something like maybe people in hospitality, where you don't really have particular customers that you need to register in your accounts. So what you just see, people come in, they buy whatever you have and they go. So can you just touch on how those kind of businesses, how they can recognize or record their sales that will make more sense?
Okay. So for those people, most times we used to create something like trade receivable, sundry customers, also something that brings a lot of customers into one bucket where you need not register any particular customer per se. As they are coming, you can book it into that GL, like a general customer kind of subledger. I don't know if you get my point. It's something similar to what you see in supermarkets too. Supermarket that plenty of people come and buy every time. It's not like there's a defined relationship for buying. And there's another bucket of people whom you have a contract with. From time to time, these guys are regular. You have to create a customer account for those ones. That's a different bucket entirely.
Yeah.
So, but for walk-in people who just walk in, there is a big bucket of general customer subledger. Like there's a one-off customer super. That is the word we used to call it. One-off customer subledger, right? Is different from.
Right.
So I can have something like trade receivable, but I will say one-off customer as a subledger. So you can see that it's not specific to a particular account. It's just a wide range of customers.
Yeah.
So this is what you usually find in such a situation.
All right.
Yep.
All right. All right. It makes sense. If time permits, there's one of the participants asked something regarding posting of invoices at the date stated on the invoice. I don't know if it's all right for me to quickly add to your comment on that.
Sure, please go ahead. Feel free.
All right. Regarding posting of invoices, it depends on the structure you have in place. So I will use myself as an example. What I've experienced so far is the earlier you recognize or you post your invoices, the better for you, because when you post your invoices, we determine when the VAT will be due for payment or whatever deductions on the invoice will be due for payment. If you have the right to withholding VAT, those in oil and gas, they will understand better. So the timing of posting your invoice is very, very key to how your taxes will be. Secondly, on how your month-end closing will be. So if you are a company that don't do month-end closing, well, fine, you can post invoices at any time, which is not really a good practice. But if you're an entity that does month-end closing, to be honest, invoices are to be posted as at when it's received. And secondly, if you are a very structured company, some companies have that invoices are to be paid from the date of receipt, maybe 20 days. So if you receive an invoice and you didn't post it, that means you are tarnishing your image, because your customers will not be paid, because on the system it has not been recorded that invoice have come in and the date of payment has not started counting. So you have your customers calling that when am I receiving my money, and your invoice have not been posted. So there is more to it than just that date. It's very, very key that when invoice comes, they should be posted.
Yep. Thank you very much for that perspective. Grateful. Thank you.
Yeah.
All right.